Hey folks, Lucas Ballahood here with Coldwell Banker RMR and the Ballahood Group. I just want to record you this video today because we've received the latest market stats in the month of November for Durham Region. I just want to summarize some of that latest market activity for you. So just in kick things off here, we have seen a definitely a shift in the market. Overall, the Bank of Canada did announce today a 50 basis point increase to their overnight lending rates, which is going to trickle down to buyers, very soon here as we see the big banks start to adjust their fixed and variable pricing as a result. Kind of was expected more or less that we were going to see another increase here. Inflation is at 6.9% here in Canada, so the government's going to continue to raise rates until they hit their target number, which, if I'm not mistaken, is around 5% as a target for inflation. So as inflation continues to run rampant here in Canada, all over the world really, we should expect those rates to keep climbing. Now, the average sale price, on the other hand, has only dropped a little bit, about $1,000 from October to November, that month over month this year. We're at 892, 667,000, down from a little over 893 last month. Our year over year, the average price has dropped a little over 10%. We were at 998,000 last November. So there's definitely been a pullback in the market, which, we've been talking about is to be expected with downward pressure from interest rates. But those higher borrowing costs have really contributed to, some hesitancy on the buyer's side of things. Sales are down around somewhere around 44% overall. We're at 564 this past month, compared to last November. We were a little over 1,000 sales. So it's pulled back a fair bit. Inventory is way up relative to last year. We're at 1.8 months of inventory. So if no new homes came on the market, it would take a little under 2 months for all those homes to sell within the time periods we're expecting here. Our days on market is a little closer to 3 weeks. It went up about a day. We're at 17 days as an average time on market, and our sale prices are averaging around 100% of the list price. So we're not seeing the crazy underlisting, selling over asking in bidding wars. However, we are seeing some more of those coming back into play again, for those homes that are generating a lot of interest amongst buyers, and those ones are seeing multiple offers. But this is to be expected. Home values are holding. A likely reason for that is, a lot of the buyers that are still in the market have those pre-approvals from, earlier in the summer or in the fall from September kind of thing. And they've been pre-approved for a little more than what someone who is going to be qualifying, tomorrow or be pre-approved for, today as an example. So, we should still see pricing continue to come down as the calendar turns over to 2023, which again is expected. So prepare yourselves for that, folks. If you are thinking about buying or selling, your budgets are going to get tightened up a little bit on the buying side and continue to see that. But affordability has not changed so much. If someone had bought a property, let's say in February or March of 2022, where our average price in February was $1,228,000 on average, those loans, those larger loans, at a very favorable interest rate, compared to today, where you might have a smaller mortgage and higher interest rate, but the payments are comparable. So affordability hasn't changed too much. On that side of things. If you are in a refinancing situation, you want to talk to your mortgage specialist as soon as possible, because if you were at a rate in the twos previously, you're going to be you're going to be looking at something much higher now. So we got to try and manage those payments and then figure out how you can best free up cash for yourselves as well. So cash flow is certainly going to be affected here in the near term. But with that, folks, another thing that we're going to see in 2023 is a lot of immigration. I've talked a little bit about inflation and whatnot. Immigration is going to be a big thing in 2023. It's expected that around 200,000 immigrants are going to be coming to Canada, and they're going to need places to live. So, that's going to create a housing shortage, which, is going to, or it's going to put more pressure on the housing shortage that is been projected into next year. So pricing could be affected by that as well, with the scarcity and the demand that's out there. You know, but here's the positive, even though it's a little bit late coming into effect, is Bill 23, the More Homes Built Faster Act. Is going to try and accelerate the time that it takes for building permits to be approved, for zoning applications to be approved, and that kind of thing. So, a lot of people, or we're seeing, developers buying up a lot of undeveloped green space here in Southern Ontario, with the anticipation that, they're going to have an opportunity to rezone that land for different purposes, whether it be commercial purposes, employment land, for example, where, businesses can operate and things like that, or on the residential side. And they're going to try and process those applications much faster as a result of this new bill. Some other factors or aspects of this legislation also include density related changes. So, as if you've been into house hacking, if it's something that you're interested in as an investor, where you've got a property that's got potential for a duplex, there's likelihood there that they're going to allow an additional unit to be put on those properties. So, two income unit generating units plus the unit that you might live in, as an example. Severances, and the severance being, cutting off a piece of property and selling it, cutting a piece of property in half, and then selling that off, sort of severing one lot into two and selling it that way, or, those kinds of things will come into play here, and they'll process those applications faster with this new bill. So the intention is there to create more supply and more availability of housing, whether it be on the new build, on the resale side, or in the renting investment side of things. We need more units for people, whether they're renting or owning. So that is a big initiative that the government is taking and putting into effect here. So hopefully we'll see that have a positive benefit over the next couple of years. But immigration is going to put a big pressure on our housing inventory and whatnot. So something to keep in mind as well. Anyways, folks, we are getting near the end of 2022. I just want to say thank you so much for tagging along with me here, and thank you so much for your loyalty and dedication to our company. And we certainly had a successful year, and we're very pleased with that. And we look forward to bringing you more value into the new year. So have a lovely holiday. Stay safe, stay healthy, and enjoy all the magic that is in the air. Certainly, this will be a fun Christmas for our family with 2 kids under 3. So we're looking forward to that in the next couple of weeks. So with that, folks, thanks so much. This will probably be the last time you'll hear from me in 2022. But we'll get back to you, early January with a summary of the year that was, and get ready for another interesting year here in real estate in Ontario. So with that, I bid you adieu. Bye for now.